Nashville got lots of attention at the recent Urban Land Institute meeting. The metro ranked in the top 10 for investor sentiment for the first time in history, specifically coming in at number 7. Also, there was a session on what ULI calls 18-hour cities, and Nashville was featured there. Today, we'll talk about Nashville's stellar apartment market performance on Apartment Market Dynamics from MPF Research. I'm Greg Willett. Cameron McIntosh is here as well. And Cameron, certainly the story in Nashville right now is recent record rent growth levels. Talk us through those stats a little bit.
Effective rents for new resident leases jumped 3.3% in third quarter 2015, pushing the annual pace of rent growth for new move-ins to 6.8%. That is the market's all-time best performance by a significant margin, but the key story here is that these numbers have been strong for quite some time. In fact, the market has seen 22 consecutive quarters of positive annual rent growth. Over that time frame, Greg, which is about 5.5 years, annual rent growth averaged 4.2%.
Let's break down those numbers a little bit by product segment. Those numbers are good across the board, but there is some variation by niche. Class B properties lead the way with 7.9% annual rent growth for new resident leases. Growth is at 6.2% in the Class A sector and 4.7% in Class C units. As we look at the numbers by neighborhood, most spots have annual rent growth in the 5 to 10% range. There is one exception with growth running at 3.2% in the Murfreesboro, Smyrna area. That's a spot where we're getting some new supply, and we have some units in lease up that have slowed down the top end rent growth just a little bit.
In addition, Greg, pricing has increased for Nashville renters who are choosing to stay in their current apartment as their lease is expiring. In third quarter, they're actually seeing a 5.6% increase in what they were paying.
These strong rent growth numbers in Nashville reflect that it's a tight market, a really, really tight market. Occupancy right now is at 97% even. That is up 70 basis points on an annual basis. That's the Metro's best occupancy performance in 2 decades, despite some fairly hefty completions. Over the past 12 months, properties totaling 3,819 units have been added, growing total inventory by 3.2%. But demand has been even stronger, coming in at 4,559 units.
That's absolutely correct, Greg. And big inventory is going to be a theme that we see for Nashville over the near term. In fact, building activity now totals 10,580 units. That's not only a record, Greg, but that's more than 3 times the future building block that we've seen over the last 3 or so decades.
Because there is so much construction going on, we do think that the current performance in Nashville really represents the peak for the cycle. But the forecast is still pretty strong. While occupancy might come down around 100 basis points, that still leaves it in good shape. And we're looking for future rent growth to come in somewhere around 3.5%. Again, a very healthy performance, but just not quite what we're seeing right now. So that wraps up the story for Nashville. Thanks for joining us at Apartment Market Dynamics. I'm Greg Willett. He's Cameron McIntosh.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.